This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the continued support and for tuning in. If you like what you hear on the Planet MicroCap podcast, please take a moment to rate us 5 stars on Spotify or Apple Podcasts. It really helps more folks discover the show and join in on everything happening here at the MicroCap investing community. We just announced our full slate of investor conferences for 2026, all in partnership with MicroCapClub. Our next major event is Planet MicroCap Las Vegas, happening June 16 through 18, 2026 at the Bellagio. Registration is now open for that. And then later on in the year, we'll be heading back to Toronto, October 27 through 29, 2026 at the Arcadian Loft. The mission is to bring the best microcap investors and companies together to gather, connect, and grow. This includes your participation. We know you are probably putting your 2026 investor conference calendars together or just your general travel schedules together. And we'd humbly like to invite you to join us for one or both of these upcoming events. Please visit planetmicrocapshowcase.com for more information, and I'll see you in Vegas and Toronto. Now, my guest on the show today is Jason Kirsch, portfolio manager at Rosen Partnership and co-architect of the firm's active value strategy, a concentrated long-only private owner style approach to investing in microcap companies across Canada, the US, and Europe. In this episode, Jason walks us through Rosen Partnership's philosophy of thinking like private owners in the public markets, buying capital-light, high ROIC compounders at meaningful discounts to intrinsic value, partnering with aligned management teams, and using constructivism, a collaborative, non-activist engagement style to help unlock long-term value. We dig deep into how Jason builds a true knowledge edge, talking not just to management, but to former executives, board members, competitors, suppliers, anyone who can broaden the mosaic and create an informational gap most investors simply aren't willing to develop. Jason also shares lessons learned from catalysts that didn't play out, how misaligned incentives can turn a bargain into a value trap, and why understanding your own psychology is just as important to understanding any business. It's a fantastic conversation about deep research, disciplined value investing, and the craft of building a concentrated portfolio. So with that, please enjoy my conversation with Jason Kirsch from Rosen Partnership. Jason, thank you for joining me today. How you doing, man?
Robert, I really appreciate you having me. You're doing a great service for the small cap community, and love the Toronto conference that you hosted, and looking forward to the one in Vegas coming up next year.
Heck yes, dude. Well, thank you for those kind words, and I'm excited to host you in Vegas. And thank you for attending our Toronto event. And yeah, that was where I was going to start. As you know, we met in Toronto. You know, talked a little bit. You know, I'm running around like a chicken with my head cut off, so it's not like I can like dive deep into everything that's on Jason's mind. But that's why I wanted to invite you on here to showcase a little bit more about your investing style, philosophy, and whatnot. So to get us started, for those that don't know you, your background, anything like that, where did your passion for microcap investing begin, and how did that lead you to where you're currently at today as portfolio manager at Rosen Partnership?
Yeah, sure. So I've always had a natural curiosity, I think, in terms of how a lot of businesses work. And I think I can remember back when in high school we had a stock competition, and I picked Apple, and the stock went up over 50% in just over 2 months. And I thought, well, that's kind of an interesting career path for me to go on. And university took a BCom at McGill, and in the third year they launched the Honors Investment Management program, which probably couldn't have created a better program for someone who has a passion for public markets. We created, starting from scratch, a regulated asset management firm as part of the school. We raised capital from Canadian banks and alumni to launch a public market strategy, as well as an equity strategy, plus a fixed income strategy. And it's a phenomenal program right now and doing really well. And they brought in a lot of fantastic speakers and really allowed you to understand and learn what it's like to work in an investment management firm in university. And when I graduated, I joined a hedge fund right out of school, worked there in Montreal for a few years, then worked at another long short equity firm in Toronto. And in 2022, partnered with Rosen Partnership and Brian Rosen, who I know from the MBA program at McGill when he was there and I was in the honors program. And we kept seeing in the marketplace these amazing opportunities, companies that were trading extraordinarily cheaply, huge discounts to what we would determine as their net asset value. And it really enabled us to raise capital around this strategy. We pitched it to several family offices, and we launched it in March 2022. We've been running it since then.
Very good. So, I mean, what was, I would say, let's say while you were at McGill, and then also at the name, it was Waratah, right? Right before.
Yeah, Waratah. Yeah.
What were some of the key lessons that you learned about the kind of style of investing that you wanted to ultimately do now that you're at Rosen Partnership that you'd say you learned during that time?
At McGill was very interesting because it was the great financial crisis. So there was a lot of volatility happening. We were having fantastic conversations. There were wonderful alumni who would come in and speak with us at 7:30 morning meetings every single day when we were there. And having that opportunity where you're able to learn, create a structure, whether it's, we had equity analysts and strategists, and the same thing on the fixed income side, and then slowly start to deploy capital coming out of the crisis that we launched in 2009. We got to see kind of a lot of what was happening in the market. And then you go into long short hedge fund, and that is a completely different world where you're learning so quickly. Coming out of school, you think you know a little bit, but you really don't know anything. And you have to hit the ground running off the bat, and had fantastic mentors in there. And the thing about learning the short side of the business, which was a meaningful part at Waratah and Gallant where I worked, is you have to kind of flip the script on every single name that you're looking at, right? You can be long and benefit if the stock goes higher. You can be short, or you can flip it at some point and think, well, now it's too cheap and now I actually want to be long something I used to be short. So having that mentality of how am I going to make money on either side? How do I protect myself from losses when I'm long, and how can I make money when I'm short, provides a kind of different mentality. And we're only long-only investors with our active value strategy. But that philosophy of how do you make money on both sides and how do you protect yourself against losses is kind of is crucial to how we think about margin of safety in each one of the positions that we own.
Excellent. All right, let's dig into it a little bit here. So you have the active value strategy at Rosen Partnership. Tell us a little bit more about the strategy's philosophy.
Yeah, it's a concentrated long-only portfolio where just a handful of names make up the majority of the portfolio. And we're looking at names in Canada, US, and Europe that have market caps below $1 billion. And we're generalists by nature, although we have kind of specific names that we like to participate in. And we want to think like private owners in the public markets. So if we own these businesses privately, would we want to own these businesses? What type of valuation are we getting from them? How would we allocate the cash flow of these businesses? And we want to have deep conversations with management team, the board of directors, previous employees, previous CEOs at these companies, and really understand the philosophy about how they're going to deliver returns for shareholders. That's the kind of key thing. We want these long-term compounders trading at deep discounts to what we determine as intrinsic value, and ownership through the management team or large shareholders who have a significant percentage of ownership and skin in the game, and the right motivating factors in there, but not too much where they don't really listen to shareholders and shareholder ideas. So we want to create a partnership in these companies that we own. What's intrinsically motivating CEOs? How do their teams operate? How do they work within their teams? Kind of all these different factors. We want to make sure that they're not empire builders for the sake of empire building. We want to make sure that they really understand the value of a dollar capital and how scarce capital can be, and finding the right returns internally in the company, whether it's organically or externally through acquisitions.
Excellent. All right. So let's talk about the deployment of the strategy. Correct me if I'm wrong. When you say concentrate, what is it? We have mostly 10 names. 10 names. There you go. Yeah, 10. Nice. All right. So I mean, you mentioned some of the criteria and whatnot, but start walking us through the process. Like, okay, here's our main checklist. You already kind of mentioned quite a few of them. Now it's sourcing the idea, talking with management. Tell us about the process to where you now are like, okay, here's a candidate potentially for our 10 name concentrated portfolio.
Right. When we started, we looked through every single publicly traded name in Canada below $1 billion. And that narrowed it down into names that we found interesting that we want to kind of follow is a lot of names. And we started doing the same thing in Europe too, to find specific opportunities. But without doing that, we wouldn't really know exactly what's out there. Some names come and some names go. And at Warton, other firms that we worked at, we were more mid and large cap investors. But when you find a name that is naturally compounding, it has very high returns on invested capital, it's capital light, it has all these ability to over time grow. We don't want them to access capital. That can be a very dangerous thing for a lot of companies unless it's for an accretive acquisition. And we want to understand, well, for every dollar they're going to invest, what are they going to do with that dollar? Are they going to pay down dividends? Are they going to do share buybacks? Are they going to put it back into the business? Are there opportunities within the business that they can even deploy that capital? Some companies, they're out of one manufacturing plant, and there might not actually be that much opportunity outside of that one niche industry or product or service that they're focused on. And sometimes they have to go outside that. And so do they have the capabilities to go outside that product niche? And not every company should be a public company. And some public companies, they kind of get lost and forgotten, especially in small cap land. And, it's our job to find out whether they're value traps or there's real intrinsic value left in these names. And is there some sort of catalyst that either we can help with, or the management team has planned out, or something that is going to get the name to go higher over time?
Gotcha. So I have a two-part question for you because, a lot of what you're saying is, you listen to the pod, like it's, you're kind of in lockstep with a lot of other, very well-known investors that either we've had on the podcast or out there, probably operating a little bit larger, areas than even us. But what would you say makes the active value strategy unique and different, maybe to some others that are trying to deploy something similar? And what is that, what's that Rosen Partnership style? Like, you talk to some of these investors and like you get to know them a little bit more. You're like, all right, yeah, that's a Bobby style company right there. Mm-hmm. Like that fits their profile, or, that's this person style company. Like that fits kind of what they're looking for. And you guys could probably have a lot of things in common regarding the strategy itself, but it's still like that company is that style of investor. Like what does that look like for you?
Yeah, it's a great question. The one thing that we really try to focus on is you got to create the foundational aspect of this business. What's the mental model that this company exists in, right? We can all do the work and try to find out who are their competitors and who's the management team and all these different things. You have to put a framework around that. What does this business do, and how is it going to make money? And does it have the ability to be a 3, 5, 10x type business? We really want to find these companies that have extraordinary outcomes on the upside, but still be very undervalued from a value perspective. So that's one thing that we're looking at. And then there's, how do you take understanding of how this management team operates, what their incentives are, how is the ownership structure put together, who are the owners in the business, and how do they want to grow this company? And then find out what's different. You're not the first person looking at this stock. There were hundreds and thousands of other investors who participated in this name and continue to do today. So what's the edge? What's the differentiating factor that you have? And a lot of that can come down to knowledge, and it can come down to knowledge, creating that knowledge gap from 90% of other investors who are in the name by doing the research and understanding all the different CEOs who manage that company and all the different people who work there. And then understanding the cycle of what was this company before. You have to put yourself in the shoes of the other shareholders over a period of time, and then understand where you are today and what differentiates the business today, and what is it going to be in the future, right? If they execute on X, Y, Z, what is that company going to look like? If they don't, what is the business going to do? And do they have the team in place that can do all the things that management says or that they want to do? And then you got to have the margin of safety, right? Some people are growth investors, some people are value investors, and we're not value investors just for having a low PE multiple or high free cash flow. It's about intrinsic value of this business. And when we think about private ownership in a public company, we think about, if we own this business privately today, what would we be getting for this company? Would we want to own this company privately? And are there private equity investors or strategics who would actually prefer to own this company? Or maybe this company is in better hands with some of these participants. So we really want to own businesses that we would own privately. And we don't really ever want to sell them. We just want to own fantastic, really great businesses that can compound naturally over a period of time. And when you can kind of put all these different characteristics together into the special situation that might be this particular name, I think that's the key criteria. And then maybe even lastly is really understanding yourself as an investor. How would you react in different scenarios that happen in the future, or that could potentially happen? Are you the type of investor who prefers to buy on earnings? Do you like to buy when you hear the catalyst or before the catalyst? Do you buy before you meet with the management team? How do you react in different situations? The key to being a great investor, you really have to understand yourself. And when you can understand yourself extraordinarily well and your tendencies and your biases, then you are a little bit different than everyone else, right? There's many different ways to make money in the stock market, but everyone has their own individual strategy, and everyone kind of has to understand how they operate within that. And investors can come along with the ride for that, or so that's always a good thing.
No, for sure. There you go. All right, that was really good. So I mean, listen, you know that this isn't like a best ideas pod. I'm not here to get your best idea, anything like that. But I love to hear an anecdote, of deploying the strategy where, it could be a previous idea, maybe that the fund used to own, or, one that is current. You don't have to name the name if you want to, but love to hear an example of, the strategy really, in action. So I'll leave it to you.
Yeah, sure. So in 2022, there were a number of names that were compounding. We saw double digits, and who had previous, they were acquired for a certain purchase price, and they were trading. They could be an asset. They were trading well below where that asset was acquired. Yet the business, there was nothing wrong with the business. It was generating cash flow. It was growing double digits, and sometimes these businesses just need to be seen by the market. And there was a lull for a very long period of time where value investing, small cap investing, there just weren't that many market participants. I think that's changed a little bit more recently, but for a very long time there wasn't really that many people looking at some of these names, or investors looking at these names. And when you can buy a name at a meaningful discount to either where the company might have bought assets, so we've looked more recently at real estate companies, and we've been able to buy them at discounts to where the management team or other shareholders got in from some of this real estate. Yet they're growing at mid-single digits and growing rental income, taking out costs in these businesses, and they're high quality properties. And what you're seeing in a lot of these names now is there's asset sales, there's a recycling of capital, and there's even a number of them that are going private. So you kind of have to be aware of what kind of market cycle that you're in, which type of names are going to work in a particular market cycle, and just making sure that we have a deep discount to that intrinsic value wherever we term it. And then as long as it's compounding, it'll eventually grow. The business will eventually work. Investors will eventually see the name. It just takes time.
So how do you marry having the long-term time horizon? Correct me if I'm wrong. You're looking to own something 5-10 years, maybe more, with kind of timing where the market cycle is, and having that kind of like, all right, this is where we think, things are happening right now, and, this might not be a good time to look at this industry because there might be a basket of names or a couple names that stand out that we want to hold for 5, 10 years. How do you marry those two concepts?
I think the key thing, besides the way that we just think about it, where we just want to own these names and they might have a bad quarter, or there might be something short term in the markets where you'd want to protect capital, but it's also having the right investor base. And it's having the investor base that knows what the strategy is about and can judge you over a 3, 4, 5 year, even longer time period. And that's been a key of our strategy. We want investors who really understand what we're trying to do, can see the results over the last number of years since we launched in March 2022, and then also be comfortable with the way we take positions. Sometimes we might own 3, 4, 5% position of a company, and you can't really get out of those businesses. You have to know them very, very well. You have to slowly get out of them over time. But they're businesses that you would always want to own. So investors just have to understand the type of strategy and how we're investing. And I think that's key to allowing the portfolio manager to invest in a way that's in the best long-term interests of their investors. We don't want to be concerned about day-to-day or week-to-week volatility. And in small cap land, prices move around 5-10%. Just pretty easily. So you have to be cognizant of what you're investing into.
100%. So, running this concentrated portfolio, 10 names, what are some of the channel checks that you do to make sure, like, okay, this is in line with some of our expectations? Obviously open line with management. I'm assuming you have with all these names, sub $1 billion, make it, that big of a position. I would assume that there is probably some kind of open line with management there. But I mean, what are some of these channel checks that you do to make sure, like, okay, thesis is in line, this is looking okay, while also maintaining an eye out for, new opportunities as they come up?
You have to look at the entire industry as a whole and where this company operates within that industry. And it's not just the one company that you're looking at in isolation. There are so many other participants that could be suppliers into that business or competitors. There's new technologies or new service providers that are going to be impacting this company. So you have to really create a full overview of everyone who's involved in this business. And this all comes in, you have to talk to management. You have to understand who their suppliers are and who their largest competitors are and who some of the new competitors are. And it's not even just talking to the current management, but we love talking to previous CEOs, previous employees. I mean, you get a really great understanding of the history of a business. Especially many of these public companies have been public companies for well over a decade or more. There's fewer companies that are going public these days. And having that understanding of the history of the business and how it's evolved is critical to understanding where the potential future of this company is. So we're always speaking with different competitors in the private markets. We love having conversations with the management team and the board of directors and previous board members to really get an insight into how these businesses operated and what were they thinking about when they were looking to deploy capital. So when you do that, that actually opens up doors into other industries where you see, well, I really like this business for a particular reason. It's growing in its market, and there's 2 or 3 other competitors. You do some work on some of those, and it's actually led us to some of our recent names where we've really liked our core holding, and then there's a competitor out there who is trading at a significant discount, and also has special situations around them where there's potential bidders out there and other aspects that we could really kind of sink our teeth into, and is also growing double digits and kind of is just misunderstood by the market. So sometimes your best names lead you into other names that you're interested in.
100%. So I'd love to hear of an example. And again, you don't have to name the name of a company where you're like, all right, it hits all our criteria, industries, loved, unloved, maybe not right now. Maybe there's some, a value discrepancy. Maybe there's some quality, but what looks like quality stuff right now. But ultimately, after the fact, we're like, oh, these were, that this is where we made the mistake or something, and you kind of did a debrief afterwards and like, oh, okay, these were some of the lessons learned. Love to hear a situation where you guys were in that, and maybe some of the lessons learned.
Where we made mistakes.
Yeah.
The hard thing with some of these businesses that have special situations, and where they might have 3 or 4 different types of assets, and we think they should sell 1 or 2 assets, and they'd realize a tremendous amount of value. But when there's a large shareholder in place, they always don't think about the best interests of every other shareholder. And sometimes you get caught where the business can be growing, everything can be happening and performing decently well, but they're sitting on all these different businesses, all these different assets that could be sold and redeployed into better parts of the business. And you can say this over and over and over again to the management team that maybe you should sell, one underperforming asset or one strongly performing asset and allocate capital into a better performing asset. But if they have control over the business and don't want to listen to you, they don't have to listen to you. And sometimes you can get stuck in a name like that, waiting for that catalyst to happen. Or maybe they say that they're going to be selling assets or looking at divestitures, and it never comes to fruition, right? And sometimes businesses or management teams hold on to assets too long that they should have sold earlier, and they were piecing off some of the business, but not all of it. And so sometimes you make mistakes like that where you're holding on for names for too long because you're hoping that they'll get out of certain businesses faster than they are, and it just never happens. And unfortunately, things can deteriorate, or you can get into different market cycles, and things don't work out that well. So you have to really understand that if it's going to be that type of situation, that you're actually there's a clear path for that to occur, for that catalyst to happen.
So how do you feel about, correct me if I'm wrong, you don't do any kind of activism, I don't think. But I mean, have you ever gotten into a situation where, look, these are your concentrated portfolio. You have the ear. I don't want to say like that, like you have the ear of management, but like you have an open line of communication. Do you ever get into those conversations with management teams like, hey, you're doing great. It'd be really great if you maybe spun out this bit or like did this, like, have you gotten or weighed in on doing any kind of suggestivism in that sense?
Yeah, we like to work constructively with the management teams.
Constructively is a good word. There,
right?
Constructivism. That'll be the next phrase. We have activism,
right.
Suggestivism, constructivism. I like that.
And it is. It's a dialogue. It's a conversation. We're shareholders. The management team is also likely a shareholder, hopefully a significant shareholder of their net worth is in that business, and that's where there's real alignment. But you also have to understand the incentives of a management team. Sometimes they don't want to sell a business because now the business is smaller. They didn't want to be part of a smaller business. So you really have to understand, how is this management team incentivized? And that's going to guide whether the situation is going to come out the way that you want it to, or it's going to come out the way that they want to. Also, who are the largest shareholders involved, and what do they think about this name? Are they absentee shareholders, or are they active board members? Are they pushing for constructive outcomes for this business, or are they self-interested? And there's a lot of all this that happens in the markets, and you got to protect yourself as an investor in these type of businesses. But we love to be constructive with management teams, and I think they really enjoy having the conversations because we bring a unique perspective, and we've done work not only just on their company, but everyone else out there that we like to share. And we can provide suggestions saying, this company is doing it this way. Maybe you can take a look at that, and we'll, maybe write up them a little memo on that and share information as it comes up. And I think that's very helpful when you're out there actively helping these teams and working constructively with them.
Absolutely. And so what's your process? Do you find an idea, take a small starter position, and then kind of build from there? Or is it more like, all right, we want to meet with management first, confirm, answer some questions that we had regarding, all of our due diligence, then take starter position and then build from there as the company continues to perform? What's the process there?
All those things. You have to be very adaptive in the market. Sometimes an opportunity shows itself and you've been doing some work on it, but there's some news catalyst that's happening and you understand it enough where you can take a starter position. There is other times where you've done all your work up front, you've had the calls of the management team, you've spoken with everyone you need to speak with, and now may just not be the right time. And you kind of want to wait until there's a better opportunity. So it's really all these different things. You have to adapt to the market conditions in front of you. Sometimes there's the time where you want to sit on your hands and wait, and sometimes there's the time where you want to be more active, and you kind of have to make that judgment call. And that's probably the hardest part. Is you may really like a name, but you just don't feel that this is the right time to be buying it, and you might have to wait. And at the same time, you also don't want to be too picky. So there's just all these different things that you have to really focus about. If you think a name's going to be up 3, 5, 10 times over the next several years, and it has all of these great criteria to it, well, you kind of just want to step in there and start taking a position. And in some of the names that we're in, they take longer to build a position. So, but sometimes when you start showing up, then stock starts coming to you. So it really depends on the type of name, the size that it is, but you really have to be flexible and adaptive to the market conditions.
So you mentioned that since inception, has it expanded beyond North America, or so is Europe more recent, or is that always since inception that you've been starting to look at Europe?
We always had Canada, US, and Europe as ideas where we wanted to focus. Canada was our bread and butter. We know a lot of people that here, and it's a really easy one for us to understand and to get in touch with the right people. But Europe has been a phenomenal ground for us, I would say, in the last year. Names that we have become very large positions of ours are from Europe. We've added 2 of them in the last year. And I think there's a number of European opportunities, kind of forgotten names that just aren't U.S. Canadian investors don't pay attention to. So we're definitely spending a lot more time in Europe now to find great names.
Absolutely. What's been some of your I guess you say, was it growing pains? Have you had any growing pains looking at Europe, or are there certain markets that you're specifically looking at in Europe for one reason or another, whether it could be valuation, language, whatnot?
We've focused a lot on the UK, although we've looked at companies in Poland and Austria and different markets in France. The thing is, trading in Europe is very different, right? It's not just about getting up earlier, but the market participants and who the investors are in some of these names is very different, and how they trade is also very different. So you just have to be aware of some of the nuances there. We have great partners to execute trades there, but you just have to understand how you're going to get in and out of some of these names, and those can be a little bit trickier when you don't know the individual traders and people who are doing that work for you in those countries.
100%. So here's a question that I've asked everybody on here, and it's probably my favorite question to ask. What would you say, even whether at Rosen, I'm butchering it, Warta, or even just getting your start, what would you say was an investing experience that really helped shape, your strategy and your focus, currently?
I think there's so many. There's a number of different types of special situations that we participated in Warta, where we were large shareholders, and other large shareholders called us to vote in proxies and kind of brought us into the table to have conversations. And at Rosen Partnership, it's been phenomenal so far. The strategy's done well, and we're really happy with the outcome, and our investors are very happy. And it's just finding those special situations that finally work out, and the thesis plays out, and it kind of everything works in your favor. And now you're thinking, well, where's the next great one, right? How do you keep replicating what you've done over and over and over again when you've looked at a lot of names, right? And sometimes you have to kind of create your own situations. We're looking at a lot of recaps and restructurings right now, where shareholders own large positions, and how do we participate in something like that? The market is thin in terms of really great ideas out there, and I think you have to be a little bit more aggressive in trying to find your own names or trying to create your own opportunities in public markets. But working at Warta or Rosen Partnership, there's been so many great names and great people that you meet along the way, and community that you create when you're doing investing for so long. I think that's kind of the most rewarding part about it.
100%. So, Jason, we're pretty much at the end here. So, I mean, what advice would you have for maybe either new investors or, folks that have been in the microcap space for a while? What advice would you give them, that you learned over your years that maybe from a mentor or something that really helped you out a lot?
You have to be naturally curious. And I speak to students all the time. I love speaking to students and sharing my words of wisdom and short 30-minute call I have with them. You have to be a naturally curious person to do well in this business. There are so many things that you're constantly thinking about day in and day out. It consumes you, but in the best way. And it's not because you're always trying to find necessarily stocks that are going to work, but you're trying to understand all the different businesses that you like and other businesses that are really interesting that you never even thought of that exist. So you just have to stay curious at all times, and curious individuals will have a passion for learning and finding out more information and creating that knowledge gap and finding their own edge and finding what works for them. But I think that's the key criteria that you have for any young individual who wants to get into this industry.
That is incredible advice, and could not agree more with that. So, that's a perfect place to end it. So, Jason, where can our audience go and find more information, get in touch with you, and to learn more about Rosen Partnership?
They can go to rosenpartnership.com and they can follow me on LinkedIn.
Awesome. Well, Jason, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe, and I'll see you in Vegas.
See you soon. Thanks.